No, okay. Can you see the screen now?
Yes, sir.
Okay, okay.
Yesterday
See,
you told to give a reading now, sir.
what sale and lease back? I'm explaining now. I'm just winding up this right now. This is the last.
Okay.
See, sale and lease back. Actually, what happens? Very good way of generating business for cash. See, sale and lease back is you are selling your asset to a lessor and taking the asset on lease from him. So he is giving you money for selling that asset. Okay. So that money you are getting, and now how you can use, you can decide that. And let's see the story behind this. See, sale and leaseback is a good way for a business to generate cash for immediate investment or operational needs. But how? Let's say there's an example here. You have an ice cream business, for example. Yes, Rajeshwari, you are fond of food, na? So ice cream business. And you also own a ice cream machine. The value of ice cream machine is $1,000. So you sell it to a entity for that price. So what is the price of that ice cream machine? $1,000. You are selling it to some company, and the condition what you are putting to them is on condition that they own the rights of ownership to ice cream maker. But let you continue to use it for your day-to-day ice cream making. That means you sold it now. That means you kept the papers with them. Please tell me, are you following?
Yes, sir.
Yeah. So what did you do is the sale is nothing but whatever the papers of that machine. You bought that machine now, so you will be having bill and invoice. So that you have kept with some seller. Okay. Sorry, kept with some lesser, some buyer. So it is like you taking loan from bank. So what happens? Sale and lease back is kind of this thing. What happens is, see, sometimes what we do, we take a property. So that property is suppose 50 lakhs. It is like this. It is like this. Okay, you understand this, it will be easy. So 10 lakhs we made the down payment. Now 40 lakhs, how will you get? You'll take from bank. So to bank, what will you do? You'll sell this property documents. That means you'll sell this property to bank. How much worth of property? 40 lakhs worth of property. Okay, you sold it to bank, but the property is with whom? With you, correct or wrong? Please tell me.
Yes, sir.
The property is with you, but like how it is different from sale and lease back is in that you got the money for this documents, and that money you can use for your business use, but here you are using for your payment of your property. Okay, so 40 lakhs is kind of bank gave you, and the property is with you for your usage. Now you repay the bank, you sold it to bank na. Now you have to buy back from that bank. So sale and lease back, this is sale and buyback. So sale and lease back is different. Sale and lease back is you are selling the property to some lessor and you are keeping the property with you as lease. This is sale and buyback. We are not studying sale and buyback. We are studying sale and lease back. Okay. So to explain you in an easy way, I have used this example. So what is this ice cream maker doing is smartly he is selling that ice cream. So you sell it to an entity for that price for $1,000, and the condition is you tell that entity that you keep the ownership of this, but you let us continue the ice cream machine for ice cream making on day-to-day basis. Now, so why does the lessee do it? Someone will ask now why this guy is a mad guy or stupid guy. Why he is doing that? So you do this because now you get to use machine same as before, but have generated a positive cash flow of $1,000. That means you got a cash flow, na? He gave you money. You now have this cash readily available to either pay off any outstanding debts or to invest in a soda maker, a new business. So as I told you in the case of bank loan you took for property, you can repay that money to the builder. In the same way, you can repay this money for this ice cream machine which you bought for loan or any of the outstanding debts you can repay, get rid of that debt, and you can or else you can invest that money in soda maker or better marketing of your business, all the while using the ice cream maker same as before. Now, instead of having all the $1,000 worth locked in one asset, you get to do more with that amount. So you're getting this money and you can use that. Na? Leaseback also means that you will have to make periodical payments to lessor. So he will definitely, since he has given you money for buying that particular asset and giving you the property on lease, he will charge you what? Lease rental. Please tell me yes or no.
Yes, sir.
So what that guy will do is, so it is same in this way. This is you, this is bank. So you sold the asset for 40 lakhs and bank has given you 40 lakhs. Okay, the asset papers are with bank. The property you are using. Now you will repay the bank in installments, some fixed installments. That installment will also include interest now. So are you paying only 40 lakhs or you are paying a higher amount to bank for buying back?
Higher.
The same way the lease works. There are many parties in the market who do this leasing business. What they do is they take your property title deeds and give you money, and they ask you to make. They have lot of money. They ask you to make periodic payments for the money what you have taken from them, and that periodic payment would also include the interest element. In this way, these guys are earning good amount of money or not. It has become for them a routine business now. If they give some if they take 10 properties on lease or 10 kind of machines or whatever on lease and give money to 10 parties, so every month they are getting a fixed rent, fixed income or not, fixed income which includes interest. So whatever they have given you, they are getting higher amount on that or not? Are they earning good in this way or not? Please tell me. Yes.
Yes, sir.
Are they only taking a fixed amount from you? They are taking a fixed amount from you, but that fixed amount includes interest or not? Come on, tell me who
Sir,
will
but
give.
what if they're not selling it to bank, sir?
What if?
Now I own one property.
Uh,
I sell it off.
Sell it off in the sense sell. You can sell your property. What's the problem? You are the owner of that property. Then
Again, I purchased it back for lease.
okay, that selling is nothing but you're keeping title deeds with that party. That party now has the ownership of that property, with one condition that you'll be
Yes.
using that property for lease. So
Yes, sir.
you got money in that case. Now that money you can reinvest somewhere else, or you can take one more property and make them some periodic payments. That periodic payment will also include interest element. So why these guys are doing this business? These guys have that. These guys want some fixed income monthly. Like that, some 10 they will do 10 investments in this way, and from every party they'll take some fixed amount. So monthly 4 to 5 lakhs if they get in this way, that is enough for them. They want in that way. So their money also will,
Yes.
they will get their money also, and they will get some higher amount in form of interest. They are earning now in this way. Tell me yes or no.
Yes, sir.
There is
But
Rajesh.
no benefits for this, no, sir.
Who?
For the one who sold.
For him, why not benefit? He got the money at once now. That money he can use
Yeah,
and
yeah.
reinvest. Where is Rajeshwari? Rajeshwari, are you following? Hello? Rajeshwari, I think she's having her dinner. So, okay. So you understood now everything now what is happening? So why?
Yes, sir.
So this guy lessee got the money and he can use it, and lesser it guarantees a kind of recurring income resulting from the ownership of asset. So he has asset ownership also. If that guy does not make the payment, the lesser can sell the asset and get the money. Got it? In that case also he can earn good profits. Suppose you came to me with your property, I took that property, gave you money, and I have the property title deed. Now you are making me lease payments. Okay. Now if you don't
Yes,
repay,
sir.
I will sell the property. That's it. So
Okay,
this
sir.
is the way it goes. This is a good business. So you understood everything. Now please understand how to do a question. Read this. So let's understand this question. The seller or lessee sells a building to lessor. So you understood now the entire concept how this goes. The ice cream wala example. And the seller has sold the building at 8 lakh for 8 lakhs. Sorry, to whom? Lessor. Carrying amount of that building is this. The cost of that building is this, and you sold at this price. The seller or lessee arranges to lease the building back for 5 years at this amount. So he will pay 1,20,000 per annum to the lessor. Okay, and he will pay at the end of the year because it is payable in arrears. And the useful life of the asset is 15 years. Transaction satisfies the performance obligation in IFRS 15, so will be accounted as sale and lease back. Why? Because he sold it and taking it on lease. At the date of the sale, the fair value is this. So excess 50,000 paid by the buyer is recognized as additional financing provided by the lessor. So what is that? What is see, the value is 6 lakhs, but he sold for 8 lakhs. Correct?
Yes, sir.
What is the fair value of building on that day? 7.5 lakhs. So 50,000 lesser
Seven.
is given as additional finance. Correct?
Yes, sir. Yes, sir.
Yeah. So implicit rate is this. So do the present value. We'll go forward. This is the annual payments. So if you have calculated this, once you do the calculation, one or two calculation, I'll move forward. This question I will give. Next question I can give you as a homework also. You will try now?
Yes, sir.
If you want, I can teach, no problem. Okay. So
But on what amount is discounted, sir?
implicit rate 4.5%.
Yeah, what amount is discounted? Like,
What are you saying, Meghna? What you pay every year is that is the amount na cash flow on which you will
yes,
be
yes,
doing the
yes.
discounting.
Yes, hold on.
It is nothing. It is not that different from the lease question. Okay. So
Yeah,
5
yeah.
lakh, yeah. So 5,26,000 is something is the present value of all those payments. Of so 50,000 is the additional financing, na? Whatever the present value is there. This much is the this 4 lakhs out of this 50,000 you deduct. You get 476.97 797. Just do that. This is related to lease and this is the additional financing done by them.
Okay, sir.
So at the commencement date, the seller lessee measures the right of use asset arising from the lease back of the building at the proportion of previous carrying amount of the building that relates to right of use retained. So what is it doing is on the commencement date when this particular lease sale and lease back thing happened na, on that date the lessee measures the right of use asset. So he is using the asset na. This right of use asset, who has the right of use asset? The seller who has sold the property to
Sellers.
the seller, arising from lease back of the building at the proportion of previous carrying amount of the building. So that he will be calculating this particular thing as per the as per what? Carrying amount. So you see,
Yes, sir.
you got what amount? 4,76,797. This is the rule. You got this amount as per 7,50,000, correct?
Yes, sir.
So as per 6 lakhs, it is how much? So 4,76,797 into 6 lakhs divided by 7.5. So you will get 3,81,437. Correct?
Yes, sir.
Understood? Now he is so this is you recognize this amount you got as per this fair value, but he will recognize it as as per the carrying amount. Correct?
Yes, sir.
Now the seller lessee only recognize the amount of gain that relates to rights transferred. So he has transferred the rights now. Of 6 lakh asset, he got 750. So how much is the gain? 150, correct?
Yes, sir.
That gain is as per 7.5 lakhs. Correct or wrong?
Yes, sir.
But he has retail, but 4,76,797 is what? It is the one which is related to lease amount. So seller or lessee only recognize the amount of gain that relates to rights transferred. So the gain on sale of building is this, of which now you need to bifurcate. You need to bifurcate. Of this, you should bifurcate this between two things, between rights retained and rights transferred to buyer. Okay. So how will we bifurcate this one? We will do what? 1,50,000 is as per what? 7,50,000. As per 4,76,797, it is how much? Because this is the present value of all the payments, na? These payments, correct or wrong?
Yes, sir.
So this, how much you're getting? 95,360. Out of 1,50,000, if you remove this, you will get this, which is nothing but the relates to rights transfer to the buyer. Okay. Who is the buyer? The lessor. Fine. Hello.
Yes, sir.
Hello. Still here? If it is all right, shall we move forward?
Yes, sir. Once we'll recap, sir, this one.
Yeah, tell me.
Sale and leaseback.
Recap. You want some explanation here? Anything? Any issue?
1 minute, sir.
Okay, 2 minutes. Just wait. See, here there are two things. Please understand. If the transfer satisfies IFRS 15 requirement to be accounted for sale as, the seller or lessee measures the right of use asset arising from lease back at the proportion of the previous carrying amount. This is okay, na? He got that like right of use asset from lease back. Right of use asset
Yes,
was
sir.
this was the amount of right of use asset, na? So this was as
Yes,
per
from
the fair
leaseback.
value. You made it. You found out this as per the carrying amount. That's the rule as per the standard. Point number two is the seller only recognizes the amount of any gain on sale that relates to rights transferred to buyer. Okay. So he has got the gain on what basis? Because he has got a higher amount from the lesser. So that higher amount has his gain or not? And that gain is because of the rights transferred to buyer, na? To lesser. Correct or wrong?
Yes. Yes, yes, sir.
So now what he will do? This 1,50,000 he has got, but that 1,50,000 is as per 7.5 lakhs. So for the present value of this 6 lakhs, what is the present value of this 6 lakhs amount?
4,76,000.
So as per that, as on today, what is the amount? This. That is the relates to rights retained. Now, if you remove this, balance is nothing but relate to rights transferred to buyer.
Okay,
So
sir.
now the cash they got is this right of use asset. This is 6 lakhs is the carrying amount. This is the liability what they have. Because 50,000 also they got additional financing, they have to repay that back also. Gain on rights transferred we have found out. The liability side is all right, and the cash is okay. That is the asset value, because that is the value they got for selling the building, which had a fair value of 7.5 lakhs. And something is missing here. So the balance amount is nothing but the right of use asset. So in this way you can calculate the right of use asset. Okay, that's it. Because asset liability side should tally, na? And right of use asset
Yes.
calculation is not given to you, that they won't give. It's a very complicated calculation to be done. So this is what is the balancing figure will recognize. So once you can
Okay.
go through this, and any doubts you can ask, I can give you this question as homework. If you want to do as homework, you can try. If you don't want, I can explain you right now, right away. There's no problem. A simple question only. Same like lease. See, everything is same. You are finding out the present value. You are finding it as per the carrying amount. Carrying amount maybe it's like 3 lakhs, correct? Then you are bifurcating. Whatever the gain you got, again you found out as per the carrying amount.
Yes,
And
sir.
then the subtraction what you did is, okay, we'll do this question. Read this. Here we found out rights transferred to buyer, rights retained. Rights transferred to buyer. Okay, we will do this. Just go for this question. So Capital Company entered into a sale and leaseback on 1st April 2007. It sold a latte with a carrying amount of this much or this much, and leased it back for a 5-year period equivalent to its remaining useful life. Transaction is constitutes a sale in accordance with IFRS 15. Lease provided with annual payments, implicit rate is given. So same question, no difference. So you just found out this, and this is what 3,89,000 present value of all these payments, correct?
Present
This is
value
your
of the
liability, na?
payment.
Correct or wrong?
Yes, sir.
So right of use asset, this is as per 4 lakhs. As per carrying amount, how much? This is the right of use asset. The same thing we got here also, no? It is also balancing, and the same thing we already found out. Got it? Hello? Hello?
Yes, yes, sir.
This was the balancing figure, and the same thing we found out also in the previous part, the carrying amount portion. We got this as per the fair value. We have to do as per
Carrying amount.
which amount?
Carrying amount.
Carrying amount. That's it. So here also we have found out as per the fair value. We are doing as per the carrying amount. So we got the right of use asset, and this will go in the asset side of balance sheet. 4 lakh is we got the cash. So this is done, asset side. Now let's see the like the carrying amount, the liability. So liability is nothing but this was the carrying amount was 6 lakh. Okay. So here also the carrying amount is, this is the cash you got. This cash you got,
Yes, sir.
you need to repay them. So this is what, and then liability, what you found out. But the only thing is this, we need to find out. So we'll do this.
That
So
will be the balance, I guess, sir.
no. We found out now here these two parts. This difference, I will tell you. We
Yes,
did
sir.
rights retained and rights transferred to buyer. So here what is happening is this 1 lakh is the gain from sale. That is 4 lakhs minus 3 lakhs. Okay. That 1 lakh is as per 4 lakhs. But as per our this liability, the present value of all payments, what is the gain?
97,413.
1 lakh minus 97,413 is
2578.
that is your gain on transfer. Finish. Okay.
Yes, sir. Yes, sir.
Done now this question. Then what is left over? Then you have this gain on transfer going to profit or loss. Then depreciation 5 years. What is the value of the asset? Divided by 5 depreciation, and then we'll find out the interest also. Right of use asset, lease liability, and Current liability is nothing but, we'll find out the current liability. Same like first the lease question. So this is the right of use asset, and interest is how much? 5%, correct? Interest
Yes,
is
sir.
5%. No? You did the discounting thing. So what is the 5% of 3,19,652? This. And installment paid is 90,000. So now leftover is this. These two got adjusted. That means principal element. See, this 90,000 is something which has the interest element included, na? So what is the principal element? 90,000 minus 19,483. That if you deduct from this, I'll tell you. 2 minutes. Just 2 minutes. See, what is your right of, what is your liability? Lease liability.
To pay is 389,652.
What is the 5% interest on that? 19,483. Please tell me.
Sir, I'm saying, sir, I don't know why are you not listening.
No, I did not understand. I did not hear your voice. If I hear, why will I tell? If you're saying I'm not able to hear. Hello?
Hello, sir.
Yes, yes. Meghna, this is your liability. What is your interest? 19,483. See, very, very low pitch voice. Almost all no voice is coming out. That's why. Now, this is
Now,
your
sir.
now it's coming. Yes, this is your interest. This is the installment you are paying. From this, we will remove the interest element. So, what is the principal element? When you pay EMI, it is a combination of principal plus interest, no?
Yes, sir.
So
70517.
this 70517 remove from 389,652.
319135.
On this again interest. Okay, and then you made the installment payment. Difference of this again principal element remove from this. You get this. So now just do that calculation. I'm waiting.
Done, sir. Same thing.
Okay. Now, what is your current liability? This is your long-term liability. This you have to repay till the end, and this is your next year liability. That means something you settled, na, or something you need to pay. That difference is your current liability for that year. Okay, that's what. This is the principal payment you need to make, na, the difference,
Oh, yes, sir.
and your lease liability. So lease liability of 245,092 is your long-term liability. Second year. That's it. So this is the question of sale and lease back. You can practice at home. Okay.
Yes, sir, I will.
Now we can do this. Now tell me, shall we go for financial instruments right now? Or after class come tomorrow?
What, sir? Can't hear you.
No, financial instruments. Tomorrow madam is taking the taxation class for you. I already had a discussion.
Taxation.
She will take taxation. I will take financial instruments, 2 chapters. Sunday, I am planning to take revenue. Done. The Monday onwards revision.
So Sunday timings.
You tell me what timings you want.
So actually I
I'm
have
fine.
like
You tell me
classes.
evening, morning, anything, Amma. I'm ready. You tell me early morning. I will reschedule my classes in that way. Only one chapter is there. Now I need to finish on Sunday. If I sit for Sunday morning, we will take. It will be very fresh time. I will also not be tired. No
Online
work,
only
no
na
time.
sir?
A morning will take and wind up. Because Monday I will start the revision and I will
Yes.
solve. I will take 1-2 hours revision. I will solve one question from ratio and one question from financial statement on Monday. Tuesday I will do ratio and consolidation. Wednesday again ratio and financial. Then again ratio consolidation. Like that I'll go every day.
So online only now, sir, Sunday.
Online only I'm saying.
Yes, sir.
If you are coming classroom, it is very good.
Online, sir, morning.
Okay then. That's almost done then.
Yes, sir. Till 10:30, sir.
Okay, fine. And you tell me tomorrow any scope? Are you having some holiday or something like that?
No holiday, sir.
Okay then. Tomorrow be ready for the class because tomorrow I can come at 4:30. Okay, financial instruments I will take tomorrow that time, and madam will take late evening taxation. Okay, sure. That is, she can take at 8 p.m. also because she will be free. Okay, fine.
Okay. So taxations we have problems.
Taxation is, it is a this question, this chapter, what we say, it's a practical chapter, but madam will
Deferred tax,
explain you.
current tax.
What am I?
Deferred tax, current tax.
She will explain you in a very strong manner. She is a faculty for tax also. She takes CMA taxation and taxation for CMA India. She takes taxation for company secretary course, and almost all she takes taxation for all the courses. I don't take taxation. See, I can take, madam can take, but what I have said is to make the task more simpler and utilize the time. I've asked her for taking this chapter, so she'll take this. I'll take that. Okay.
Okay,
So
sir.
5 to 7 or 5:30 to 7:30 I will wind up this one. Then 8 o'clock or 8:30 she'll start this and she'll wind up this one. Fine. Sure. Sunday is the last and final day for our syllabus. Leftover theory chapters can be discussed like this one. It's not a big deal. Our standards are done. So almost all we can focus on revision. Okay?
Yes, sir.
Fine.
Yes, sir.
Is this plan okay, or you want right now anything, financial instruments, something like that, or tomorrow we'll take a fresh dry chapter?
Dry in a sense or theory, sir?
Not theory. This is also practical, but very dry.
If you'll complete, sir?
Tomorrow I will complete. No, tomorrow if I sit 2 hours, I will complete financial instruments.
You can complete half.
God.
Okay, sir.
If you tell me tomorrow I will take, I'm saying no problem.
Okay, sir.
Okay, sir.
If I explain right now, it will not get into your head. I'm telling this is the most dry chapter of this book, financial instruments. Okay.
Okay.
Okay,
So
sir.
first you get a grip on leasing today completely. Once you get a grip, then tomorrow be ready, because here also all present value calculation will be there. So be ready tomorrow.
Okay.
Right?
Okay, sir.